The outlook for the labour market will be less robust next year compared to the improvement in 2022. According to analysts, they expect global headwinds to pose risks to the Singapore economy. Employment rose for the second year in a row as the economy recovers, with businesses and social activities gradually returning to normal. Lisha Rodney reports.
As Singapore restores itself from the COVID-19 pandemic, the job market has shown healthy signs. Employment for residents aged 15 and over rose to 67.5%. That's 2.3 percentage points higher than pre-COVID levels in 2019. Professionals, managers, executives and technicians, or PMETs, make up nearly two-thirds of all employed residents. That's up from last year's 62%. Wages were also up. Real median income growth improved from 0.9% last year to 2.1% this year. Income growth for lower wage workers was stronger compared to that of workers with median salary. That's because of the progressive wage model, which helps lift workers' salaries through skills upgrading and productivity improvements. Manpower Minister Tan See Leng says the government will build on tripartite efforts to uplift lower wage workers.
Uplifting lower wage workers is a whole of society effort. The government is also co-funding the wage increases given to lower wage workers through the Progressive Wage Credit Scheme, which will last from 2022, it started, right up to 2026. Now, I encourage all employers to use this period of support to accelerate firm-level productivity improvements so that the wage increases can remain sustainable in the long run.
Analysts expect wage growth and hiring to be uneven across various sectors next year. They note that domestic sectors like hospitality and tourism could benefit from increasing international visitors. External-oriented sectors like manufacturing are expected to soften amid a global slowdown.
There could also be some second round effects as well, because when some of these externally oriented sectors don't do so well, it may also mean that other sectors like transport and storage also get affected. If the demand for output is not as robust, then the demand for labour may not be as strong.
Overall, market watchers expect the local labour market to be less robust next year.
Singapore, being quite externally oriented, cannot ignore the risk of all the global risks that will pose to our domestic economy. So I would expect that the labour market starts to become less tight from current conditions, owing to the fact that global growth will not be as robust in 2023 compared to the past few years, 2021 and 2022.
Nonetheless, the Manpower Ministry is urging employers and workers to reskill and stay relevant to build a more resilient workforce.
Efforts are also underway at the grassroots level. Choa Chu Kang and Hong Kah North constituencies have rolled out a new initiative for job seekers in the West to get career advice and interview tips from professional career coaches. Launched at a community job fair, the career resources stations also aim to improve job matching for candidates and help shorten hiring times. They also provide more exposure to jobs in the IT and green sectors. The stations will travel around the constituencies over the next month and are part of a broader effort to help residents upskill and upgrade.
I think almost all of them offer training so that the workers who may not have the skills yet can sign up, join them, and they'll provide the necessary training. This is an important part of our economic story, that we keep upgrading our people, upgrading our businesses, upgrading our economy so that the future will be better for Singapore and Singaporeans.